We're looking live at the Nasdaq after a follow-through day today, which was day 4. After this 3 legs of selling, this 3-month correction that we had, 12% peak to trough. There's the first leg, there's your second leg, here's your third leg. Like I say, from peak to trough, 12% correction in the Nasdaq. And if we can count them here, this is day 1, day 2, day 3, which ended with a hammer, and day 4 with another hammer. So consecutive hammer candles reversing the other way. Time to get into action here. We'll definitely change to yellow tomorrow. If you don't like anything on the menu, you can always buy something like TQQQ or just the QQQs, just to get into the market if you've been all cash. That's what I would do. I can't tell you what to do, but that, if you didn't want to buy anything, that's what I would do. Anyway, Nasdaq with a follow-through day. That doesn't mean that it's going to rally, because there's many failed rally attempts. I think during the .com bust, we had like 18 failed rally attempts, and we've had 2 recently. I guess I'll go back to the Nasdaq. I got to head to Apple. Yeah, we had 2 failed rallies recently. Right here, boom, failed, come down, came up again on a follow-through day and sold off. So this one could fail as well. But there has never been a new uptrend without a follow-through day. But that does not mean that every follow-through day is a success. Many of them failed. So we'll just take it one day at a time. Like I said, the Qs are, on the menu. Apple, they report earnings tomorrow, November 2nd, after the market closes. Looks a lot like the Nasdaq with the the 4 up days today with a hammer candle and increasing volume. So anyway, I have no idea what Apple's going to say tomorrow, but I do like Microsoft. This is one that I'm going to buy. You can do whatever you want, but I like this breakout above that 340 level here. Yeah, I don't care if it's 346. Yeah, I should have got it at 340, but it doesn't matter. This breakout here, you can see how it made this double bottom pattern. That's an early entry buy point, by the way. So the standard would be here at 366. But it came up here after this double bottom base and then started trading sideways here real tight. And then on light volume, as you see here. And then boom, it took off on the earnings report and then pulled back to the 21. And when it found support there, the last 4 days, just like the Apple and the index, 4 days up in a row. And to me, that's breaking out from that 340 buy area. Anyway, I like Microsoft here. I do not like Google. Why don't you like Google, Marty? Well, it's trading below the 50. Really sold off hard with massive volume on earnings. This thing looks terrible. Yeah, there's been some nibbling here recently, but that thing went from 141 down to 120, and it's going to take a long time for it to recover those losses. So it does not look good. Meta does look very good to me as well. It pulled the old Debo here where it sold off after earnings, and then see right here you get a shakeout, and then you get a second shakeout, and on this second shakeout, it undercuts the prior shakeout of 274. I think this came down to like 270, and then ramped more than 10%. So that's a nice shakeout plus 10% move for Meta Platforms. Amazon, same thing. It had this second shake here, which was really hard. Had this first shake here, came up, had this second shake, and then it had the earnings report, and then it did the Debo again. I can't say Debo because he's injured now. So he's got to get back in the game. But it definitely put its foot in its ground and went right back through its moving average, which I like. I would say that 134.48 is an interesting area here for an early entry on Amazon. Just eyeballing it here. I haven't really, I like Microsoft. I haven't looked at Meta and Amazon too closely, but I like both of those stocks as well. Just reviewing here on the fly after hours. Okay, what other ones do I have? Tesla. I do not like Tesla either. Why don't you like Tesla? Well, it's trading below its 200 short-term moving averages, trending down. This is you can see the 50 SMA trending down. So Tesla's a no-go. NVIDIA. Now this one might be up tomorrow on the, well, it had the AMD earnings report last night, and the SMCI Supermicro earnings tonight, which were pretty darn good. They blew it out with, raised guidance significantly. So maybe this sector will get a little a spark tomorrow. AMD, yeah, I don't like it below the 50, but this has the ability, NVIDIA has the ability to move fast, as we've seen here. This big ramp up and now the consolidation. So don't count it out, even though it has that head and shoulders look to it. I mentioned AMD. I'm going to go to the semiconductors, which have been kind of hammered lately. And this one traded below its 200 and rallied back above. See, I would like Tesla a lot more if it could do something like that, trade through its moving averages. But we'll see how they react tomorrow after this follow-through day today and the earnings report from Supermicro tonight. Since I'm mentioning Supermicro so much, let's go to this stock here. Okay, 261 after hours. Very nice, nearly a 4% move. Let's see if it can get through this 50 simple moving average, which would be about 267. But this thing went from 317 to 226. In a couple of weeks, not even that, from October 11th to October 31st. So 20 days. Okay, 3 weeks, man. That is rough. If you're trying to hold this stock long, I wouldn't, because it's below its 50, but you do what you want. I know, some of my friends are hanging on to this thing because of the fundamentals. Stocks are going to go up because of their fundamentals, not just because of the chart. Anyway, enough of that. Couple other ones in the semiconductor sector just been beaten up. Is a ACLS. It's a big mover, but man, this thing's way down. AEHR is another one, just got hammered. These things look terrible. Applied Materials got support at the 200, so that's something. It's up the last 2 days, and you can see the RS line pointing higher. If you just go sideways, if you just go sideways in a downtrending market, you got relative strength. That's how bad the market has been recently, and I believe we could have a relief rally. Something about the stock market is it's not a linear process. You could make your whole year in a 4 to 6 week period like we have right now. So if you've had a bad year, get on the stick and start being aggressive, and maybe you can make up your year in the next 4 to 6 weeks if the market decides to rally. One thing that interests me today, some guy was giving me a hard time about the computer cybersecurity stocks, and he likes Fortinet, but I like to pick a leader, and leaders in this cybersecurity sector have been changing over the years. CrowdStrike and Zscaler for a while, then Palo Alto and Fortinet, but now I believe it's CrowdStrike is clear leader here. I have this on our ready list as I like that bull wedge pattern, but it's trading above its 10 EMA. And if I look at Fortinet, this thing's below all its moving averages. Palo Alto is one that I like, but it's trading, below its moving averages. It got back above today, so very nice. Definitely a stock of interest. And Zscaler as well, trading below the 50 here. So to me, CrowdStrike's the one that I would want to own in that group. And I just wanted to point that out. You like to buy leaders. So if you like, let's say I'm going to go to the shoes. If you go to the shoes, you got to buy Deckers, right? I mean, you don't have to, but if you want to buy the leader, you're going to buy Deckers. While the Nasdaq was selling off, this thing was just forming a base, and then it blew it out and making new highs. Whereas some of the other stocks in the group, like Crocs, who report tomorrow morning, or just can't get, it looks like it's forming a rounding bottom. We'll see what happens tomorrow. But ON, same thing, trading below its moving averages. Looks like it's just forming a base here, but certainly not a leader like Deckers. So that's why I like to stick with the leaders, and that's part of that's a good strategy. A couple of the retailers, since I'm going through retailers here, Abercrombie and Fitch, this one looks good to me. I mentioned that bull wedge and CrowdStrike, and this has got one too with support at the 21 here. So that one might appear on our ready list. Also, American Eagle Outfitters. I'm going to go to the weekly here because this is just a big old base here, stage one. And then it's got this little cup, which is actually like a handle, right? If you look at the daily, right? That's this big thing that we're looking at here. As it pulls back to its 21, it just keeps finding support recently. So this one, again, it's got this little wedging type pattern on lighter volume. So I kind of like that. American Eagle. Okay, anyway, that's enough for retail. I did the cybersecurity, semiconductors. I'm going to go to the oil and gas. I know everyone loves the oil and gas, and these stocks are just showing strength. I'm not going to discuss them. Just when I go through these, just look at the RS line, look at them making new highs. I mean, I'm not saying these are like buys right here, but they're definitely showing strength. This one was up nearly 9% today. That was on our ready list recently. RRC made a new high today. That was been on our ready list recently. I just got to go to the weekly on this. This is a beautiful consolidation and now pushing away from its base. So yeah, I still like. I shouldn't say I like the oil and gas stocks, but they're showing strength. So I like stocks that show strength. This is Gulfport Energy, oil and gas, U.S. exploration. You can see the big base moving higher, supported at moving averages. That's what a trend trader, wants to hold on to. Anyway, enough of that. They are showing strength as evidenced by, the RS line just pointing straight up. I'm going to go to the drug stocks because I wanted to talk about one stock particular. This is a earnings gap from TGTX, and I know quite a bit about this stock. Yeah, nice 31% move with over 1,000% above average daily volume. So that one is not to be ignored, Dan. The thing with this company is that they launched their drug. They got a drug approval back here in December or so. They launched the drug, I believe, in February or March, and then their first quarter was only like, I want to say 7 million in sales. The last quarter was 16 million. This quarter was 25 million, but they had 140 million in licensing fees in Europe. But then they raised guidance for next quarter for 35 million. So you're looking at 3 quarters of 35, 25, 16. So you're getting this sequential accelerating revenue growth here down here. And this could be $1 billion drug the way it's looking here. For the first 3 quarters, it's delivered 75 million in sales, and it's just ramping into 2024, which you can look at the comps here. I think they're going to crush these comps by a mile. And I was listening to the conference call, and the CEO was talking about they're not getting patients from switching from another drug to their drug. They are getting some, but they're not capturing as much as they thought. But what they are getting is doctors are prescribing new patients to their drug, which is a multiple sclerosis drug called Briumvi, and it is much less invasive than the competition. I think it's twice a year you have to sit in a chair and have an infusion for an hour, as opposed to the other drug, which is sit in a chair for 4 to 6 hours, and it's once a month or every 3 weeks or something. So the other drug is much more invasive. This one is much less invasive. Doctors like it. It's starting to ramp. So like I'm saying here, 165 million, that is with licensing. I'm just going to say, I think this is could be a big blockbuster drug, and it's sitting here with a market cap of 1.5 billion. Like I said, I think it could be $1 billion drug. So you do the math there. This is for people with patience, no pun intended. Anyway, I'm going to get off my speculative. It's not so much speculative anymore, but micro cap biotech stocks, and go to the proven winners. This is Lilly. They report tomorrow morning before the bell. They're going to crush it. I'm just interested in the reaction to the reports, because I'm sure they're going to beat and probably raise. But, it's got a 526 billion market cap. So a lot of the growth is priced in. So it's important for me to see the reaction to how, this thing could go right back through 600 to make a new high tomorrow, or it could come down and close that gap there. and I believe it's 455. If I did my, yeah, 455. So very interesting from Lilly and Novo Nordisk reports tomorrow morning. They pre-announced earlier a couple weeks ago, and you could see, when it ramped up after the stock split, it ramped up to 104. That was when they, they guided higher and said they're going to crush it. So tomorrow, it's a game they play. They're going to crush it. They'll beat their raised guidance slightly and probably, raise it again. They're selling everything they can make in Ozempic and Wegovy. They just can't make enough of it. The manufacturing is the problem, the supply, not the demand. There's plenty of demand there. Anyway, that's enough for the drugs for today. I did retail, I did cybersecurity, I did oil, I did semiconductors. Oh, I got to go to the sexy stock, ACGL. This one's on our watch list, and I know some people who
I didn't get that. Could you try again?
bought this thing. I don't know what that's going on. Anyway, this just made a new high today, and you can see it break out of this base here. Nice cup with handle, broke out, pull back to the 21 now. This is an earnings report, and so it went higher on a strong earnings. So good for the longs there at ACGL. AJG, they bought a company recently and it pulled back to the 50, but now the last 3 days it's stabilized and regained its traction and looking like it wants to make new highs. AJG, that's Gallagher. Shout out to Doc who turned me onto that stock. It's a very good stock. What was the other one I was going to show you here? Oh, the IPO, Skyward Specialty. This is a spinoff from AIG, I believe. But anyway, IPO'd and it came, ramped nicely the first, few months here. Got into this consolidation period around 20, 25, 32 would be the buy area. Now it's at 28. So that one looks pretty good to me, Skyward, and just kind of flattening out here along the 21 EMA. And I believe that's it for today, except for I did want to talk about a couple things. Hold on. This earnings for every, TG Therapeutics, it goes up 30%. There's been a lot of implosions here, and you got to be careful of earnings. This is Paycom. You can see it's done it before. It's turning into a serial gapper to the downside. 19% that time, 38%. Double your fun, double your pleasure, double your fun to the downside there, and that is no fun. I'm just telling you, you got to be careful. These earnings are really, this market is not friendly to earnings misses. Estee Lauder, this has been a monster stock for a long time, down 19% as well. If I just go to the month, you can see how long this has been a winner, and now this thing is just falling off. I'm going to discuss competition here in a little bit, but Estee Lauder, they're making excuses about the Israeli war as part of their response, citing that for their shortfall. Big Five Sporting Goods, I don't know. Dick's had a hard time, and now Big Five doesn't look good. So down 22% on earnings. And I'm just showing you this just so you're aware that this is really treacherous market here. Canadian GOOS down 8%. MTCH, the dating app, 15%. These are horrific moves. SLAB was down a lot, and it actually came back today and closed near the high of the session, 94% of the daily range. So a good comeback there, but still down over 5%. That's pretty rough. And then AMCR, this one just got tortured. When was it? It was today. What, yesterday? Which one am I talking about here? I got the wrong ticker symbol. Anyway, I'm going to move on if I can't get it. There it is. The semiconductor. Yeah, this was the 27th. Yeah, down 22%. And you just got to be careful here with the earnings tomorrow. I mean, earnings every day. If your stocks going into earnings, you better have a huge cushion. I usually take the worst day of the year and add a 5% stop loss. And I have to have at least that much cushion to hold into earnings. Is just too treacherous out there. Anyway, that's it for me today. And in honor of the great Steve Jobs, I have one more thing, and that is ELF. They reported earnings tonight of 76% year-over-year sales growth. They talked about shelf space, really, ramping their shelf space, much like Celsius. with their Pepsi deal getting more shelf space, these guys are talking about more shelf space, and with 76% sales growth, that's pretty darn good. You see 33.49, and I'll have more on this earnings call in the morning, but I just wanted to point out, even with the blowout earnings, don't expect it to go back to new highs. It still needs to form a base, maybe one more earnings report of 70% growth. This thing could form a cup with handle pattern and really take off to new highs. But if you're a long-term holder of ELF, I see nothing wrong with this thing. I know a lot of people give me a hard time, but look at this. It formed bases along the way. Okay. It formed all these bases. It went up, which stocks normally do. They form a base, they go up 20%, they form a base, go up 25%, they form a base. Okay. So this one had a big long base, 28 weeks, and then it had this long rip for nearly a year, and so it really needed to form a base, and now that's what it's doing. So if it just does this for another couple of months, I mean, who cares, right? And then continues higher and does what Estee Lauder did for a good 20 years, ELF could be one of those generational type of stocks. The younger generation are really attracted to it. They use it. And when you get loyal customer bases, you can have a generational type move like that. So I think ELF is definitely one to watch, not just tomorrow, but just going forward and into 2024. It's up at $100 tonight, but yeah, I like ELF, and you just can't expect too much of a stock that's up. Let's go here. How much is it up? It's up 116% in the last year, so give it a little bit of a break. That's a big move. And this thing just came down as the Nasdaq corrected. So for the Nasdaq to correct 12% and this growth stock to correct, I don't know what it corrected, 25%, 32%. That's pretty normal, So I'm going to keep my eye on it. I'm not buying it here. I mean, it's below its 200. But just keep my eye on it. It could give you an opportunity going forward. Could be a long-term hold for like a retirement account. Anyway, that's it for me today. Thank you for watching at mcstockcharts.com. We never give up. Ever. Never.